zoom out, remove the noise. If tomorrow is not going to be more digital than today, then start worrying. You can also worry at some point about the big cycles. So 2026 is likely to be a down year. Will that happen? I don't know. Most likely. Now, you can either hold on through the down years and keep adding and increasing the value of your portfolio, or you can unload some risk. The time for lifestyle chips are somewhere between December and March. We will obviously get more volatility in the space. Expect 30% pullbacks frequently, maybe 35%. These will happen. Maybe Bitcoin goes to 100,000 and then pulls back to 70,000 and goes up. Don't freak out about it. It's really normal.
It's been an exciting couple of weeks for cryptocurrency investors. Bitcoin, the world's largest cryptocurrency by market cap, has breached the $99,000 level for the first time, and investors are looking forward to the inevitable rise to 6 digits. Though there has been a bit of retracement with Bitcoin currently trading above $98,000 per coin. Experts believe this is only the beginning of the bull run, and much lies ahead for the cryptocurrency market in the coming weeks and months for Real Vision founder and CEO Raoul. Investors need to know how to navigate this phase of the bull market, which he describes as the banana zone, so they don't miss the opportunity. Or in his words, this up pal has a few simple rules for navigating the bananas. His topmost and most popular rules are no FOMO, no leverage, fill your main bags with top cryptocurrencies, avoid over-diversification custody your coins and limit your degen bags to only about 10% of your portfolio, according to the former Goldman Sachs executive. Taking these precautions and zooming out when things get murky will help you enjoy the full opportunity the cryptocurrency industry presents. Pal believes the cryptocurrency market is on track to grow from just over $3 trillion today to about $12 to $5 trillion next year and $50 to $100 trillion by 2030. It's a monster lifetime opportunity for all investors across the globe. In a recent video update on his Raoul Pal, the Journeyman YouTube channel Pal presents more rules for staying ahead in the banana zone and taking full advantage of the digital asset space. In the video, Pal talks about having a long-term time horizon, preparing for a down year, and taking some lifestyle chips to achieve personal goals. We will bring you clips from Pal's video.
The other key thing, the actual real hack to all of this, is just hold for a long time horizon. Just holding means you don't do anything. It's very difficult to make mistakes. You're self-custodying, you're not trading, you're not trying to scalp anything, you just hold it. And guess what? Over time, Bitcoin's done about 150% a year, including 3 kind of 70-80% drawdowns. And by doing nothing, you just compound the returns over time. I like to add to my bags into the big cyclical sell-offs, that once every 4-year down cycle. I like to add, and then your holdings compound and you make more and more money each time. But just have a longer term time horizon. For sure, look at the hourly charts. It's fun. I've got them up all of the time, but I don't trade them. I just hold. I barely do anything. I make a couple of asset allocation switches in the entire cycle, and that's it. And magic happens, and it stops you f***ing up. So try your absolute best not to do anything with your main holdings. Also, zoom out. This space is all about noise. It's called FUD, fear, uncertainty, and doubt. You'll find that somebody somewhere is trying to scare you, telling you it's a scam, telling you it's going to collapse, telling you something is going to happen, the Chinese are going to do something, the Russians are going to do something, something's going to go to war. You know, all of these things are going to come across your screens every day, and they will make you feel insecure. Remember, this is noise. This is an adoption of technology. And if tomorrow is going to be more digital than today, we will use blockchain rails for proof, for social proof, consensus proof of value, of transferring assets, of holding assets. Everything in a digital world is going to require blockchain rails. It'll be equity markets, bond markets, currency market. It'll be art. It'll be tickets. It'll be anything, any contract is better on the blockchain because you don't need a trusted third party because the consensus mechanism allows everybody to trust it. So over time, the adoption of Bitcoin is huge. In fact, it's still growing at twice the speed of the internet, where back when the internet was in its early days. So something that grows at that speed also goes up in price. So zoom out, remove the noise. If tomorrow is not going to be more digital than today, then start worrying. You can also worry at some point about the big cycles. So 2026 is likely to be a down year. Will that happen? I don't know. Most likely. Now, you can either hold on through the down years and keep adding and increasing the value of your portfolio, or you can unload some risk. And we'll talk about some of that. Don't forget, en route, make sure you take some lifestyle chips off as well. This is a really important concept. I've got another video on this, but lifestyle chips are the ability to take off some profits in things that really matter to you. So if the markets turn around, you don't time the top properly, or whatever you're trying to do, you've paid off a mortgage, or you bought the car, or you've bought the holiday, you've done whatever it is that you need for your own life. And you're going to hate selling out when you have to take some lifestyle chips off. But at the end of it, your future self will thank you massively. So make sure you think about that. The time for lifestyle chips are somewhere between December and March. We will obviously get more volatility in the space. Expect 30% pullbacks frequently, maybe 35%. These will happen. Maybe Bitcoin goes to 100,000 and then pulls back to 70,000 and goes up. Don't freak out about it. It's really normal. But remember to take some lifestyle chips off at some point.
Pal's concept of taking lifestyle chips off the table refers to the idea of cashing out some investment gains to improve your current quality of life, rather than constantly reinvesting everything for the future. He believes it's important to occasionally realize some of your financial gains to fund meaningful life experiences, such as traveling, buying something special, or securing a particular quality of life for yourself or your family. While he strongly advocates for long-term investing and compounding wealth, Pal also encourages not being overly frugal or neglecting your current well-being for the sake of future wealth. He highlights that markets are uncertain and locking in. Some gains can protect against potential downturns for this. This cycle, Pal suggests that investors with urgent needs can take some lifestyle chips between December and March, when he expects a significant pullback during tax season. Pal says taking some profits off the table before the pullbacks begin will make you feel more at ease through the rest of the cycle.
So if it does sell off 35%, you've got a bit of extra cash, buy it if it's not the end of the cycle. If it is the end of the cycle, then you wait till it goes down 70% or so, and then you pile in as much of your savings as you can on top of your existing holdings and let the magic compound over time. Let me tell you a little bit about that, because I've learned that the hard way. So the mistake there was I bought Bitcoin at $200 back in 2013. Amazing. I then rode it all the way down 85% because I knew it was a long-term bet. It then went back up in 2017 and it was trading about $2,000. And there was some FUD, the forking of Bitcoin into two different Bitcoin blockchains. And I was like, I don't really understand what's going on. And so I sold out. So it was the FUD that got me. And I then had sold out. But I was pleased. I'd made 10 times my money. Great trade. I thought, I'd done it well. It then went up another 10x in the last 5 months of the year, which was unbelievable. I never seen anything like it. I missed that, but I was fine because I'd taken money off the table. I'd taken my lifestyle chips out. So I felt pretty comfortable. The market then falls all the way until 2019. So that was the down year of 2018. And 2019, I started looking at it again. And really in 2020, during the pandemic, when it fell 50%, is when I got back in. I think I averaged in about 6,500, and I'm still long to this day. Okay, so that looks pretty good. I bought it cheap. I sold it expensive. I bought it back cheap. But when I looked at it, and I bought a lot more at the end, the second time around in 2020, when I go back and look at, if I just held my original bet, which was much smaller, I'd have made 5 times the money from trading it. You see, that's the issue here. Now, had I listened to myself and bought the big sell-offs and doubled up my position every 4 years when we had the down cycle, I'd have 25x'd my position. And again, you can only do this in the very top tokens, mainly Bitcoin, but maybe Solana, Ethereum. But really in Bitcoin, that's where you can do this very long term, because Bitcoin is much more secure as an asset over time in terms of its adoption and acceptance at large. Then you can diversify out into riskier stuff. But buying the dip would have made me a fortune. The FUD cost me money. Trading cost me money. I didn't do the hold. You see, so there's a number of ways you can f up. You can lose your token. That's when an exchange goes down. Or you start using DeFi and you put your money for a yield into some stupid shit, which is what people did in Terra Luna. And again, I did not do that. Or BlockFi or Celsius or all of these things. Everybody lost money because they parted with their tokens. Storing in the wrong exchange. OGs remember Mt. Gox. They still haven't been paid out. That was, I don't know, 10 years ago. So that's why I don't like to keep things on exchange. Hold on, let the gains compound. I've also screwed up by having this big diversified bag where I thought, all of my tokens will go up, and I tried to asset allocate. That screwed up, and I've got a wallet of shame like most of you have. And that failed. A lot of people have got wallets of shame from the NFT craze in 2021, and many of you will end up with a wallet of shame from the meme coin craze. So in meme coins, keep it to a small weighting, please. It's great fun, get involved. But if you've got too big a weighting, you risk losing everything. And then you've fucked up with rule number one, which is don't lose control of your token.
Solana has reached a remarkable milestone, hitting an all-time high of $263, according to CoinGecko. This new peak comes over 3 years after its previous record and highlights the token's dramatic recovery and growth. The journey to this milestone hasn't been smooth in late 2022. Solana's price plunged to single digits during the fallout of the FTX exchange collapse, reflecting significant market uncertainty. 2023 presented additional challenges as the SEC labels Solana a potential security heightening regulatory fears. Despite these setbacks, Solana demonstrated resilience, experiencing a year of explosive growth that allowed it to reclaim its position as a top-performing cryptocurrency. Solana's resurgence makes it one of the few major crypto assets to reach a new record high during this market cycle. For perspective, 2 years ago, Solana traded at just under $12. The current price reflects an appreciation of over 2,000%, underscoring its exceptional performance and the growing confidence in its ecosystem. Pal has been predicting this moment for quite some time and believes there's more to come for the Layer 1 token. One of his recent tweets reads, "Solana has been quite the ride so far, from the low to new all-time highs. Plenty more to go." In a follow-up post, Pal adds that Sui and Dogecoin will be the next tokens to reach all-time highs in the Great Banana Rotation. Do you agree with this prediction? Don't forget to like and subscribe to the video, and let's keep the bull run going.